if economy's getting stronger, you don't need as many rate cuts. But
right.
How did that unfold? Like, did I have to put tinfoil here on for a second, right? Like, how someone leaked something to someone and say, look, we're gonna get rate cuts, number one. Number two, that happened before the Fed even met and deliberated. So what the hell is the point of the deliberation and meeting if that's the case? Am I off here anywhere, or?
Well, I mean, I think the Powell Fed in particular has been sensitive to not creating essentially significant day of policy divergence from what's priced in, and so have in explicit ways and implicit ways.
It's called Nick at the Wall Street Journal at Nick Emerus. Hey, 50 bips. Is that
maybe anytime he's asking a question, during the Fed blackout period, it should be taken less as a question and more as a statement. So I think there was a desire to go big in response to what was going on. That desire appears to have been made or concluded before incremental information that was released right ahead of the Fed meeting. I think it's part of this broader thing of, look, in general, central banks facing the type of conditions that the Fed is facing would not engage in an aggressive easing cycle. The Fed has chosen to do something different in terms of the reaction function. I think the dots show that pretty clearly, where you have pretty good real growth, pretty good unemployment, inflation that's above their mandate, and cutting hundreds of basis points. So they've made it clear what their reaction function is. And so you just, as an investor, like, you're welcome to comment all you want into the ether about whether you think that's good policy or bad policy.
How do we react?
It doesn't matter whether you think it's good policy or bad policy. It is policy.
Right.
And so given they have, to be clear, they've reframed their reaction function. The reaction function wasn't this way in June. It is this way now. They seem pretty committed to it. I thought it was very interesting in the presser that Powell it would be one thing if Powell's like, look, employment's deteriorating. I'm really worried this is becoming self-reinforcing. We really got to get ahead of this. I really got to ease, because I'm really worried about it, probably more worried about it than the market is right now. That would be a totally rational series of conclusions, right? They're just basically trying to get ahead of things. But that's not the argument he made. The argument he made, and that would be like a insurance reaction function.
Adjustment cuts, right.
That's not the argument he made. He made the argument that the economy is good and we're cutting like hell. And you put those two things together, and what that means is the Fed is totally cool with being accommodative, right? Not normalizing, not protecting a downside, but accommodative in the face of a strong economy. And that's a totally different monetary policy path than I'd say normal central banks take. For instance, the Bank of England's taking a very different monetary policy path. Right. The RBA is taking a different monetary policy path. Right. And even the Bank of Canada, which is facing relatively acute deterioration in their economic conditions, is being, isn't that responsive relative to the sort of policy path that the Fed is outlining. The Fed's choosing that policy path. Now we just got to talk about the consequences.